feel so naked today, man. No laptop.
Oh yeah, you'd be like me today.
You ever think like the repair people, like you drop it off? You ever think they just YouTube it? Like, do they really know?
They just have the tools. They just YouTube it, but they have the tools.
Yeah. They're like, oh, this guy doesn't want to go on YouTube for 20 minutes, so they do it and they charge you more.
Yeah. Could be.
I hope the laptop's back tomorrow, but the keyboard won't work. It's getting up there in age, you know? Sometimes keyboard doesn't work, you know?
When you get up there in age, is that true? Is that true?
Well, I don't know. I'm not there yet.
Is that factual?
Welcome to the Doe Show, everybody. Just our fun hangout type show.
Because it's fun! We're having fun!
Where we just kind of talk about...
Did you emphasize that for some reason?
Yes, I did. We just kind of talk about whatever, man, but as long as it affects your money, and in particular, each day we have sort of a subject, and Thursdays are technical Thursdays. We have not done a technical Thursday. You don't know what I'm going to talk about. Do you have something?
Clue. I do have something.
Is it technical? Because we don't really know. What is technical? We haven't defined technical.
I thought about just being way over the top, like a smart aleck with this one on like, technically it's technical, but like I was just, I was going to have some fun with it. But we can get a little...
Would you say yours is advanced technical or basic technical? Because Is
there something in the middle? It's right in the middle.
Right in the middle?
Yeah.
Because I kind of went basic technical.
You went basic?
I just kind of thought, I didn't know how to define the show.
Well, you didn't want to go too far over the top right from the get-go.
I took care of that the other day. Yeah, by the way, did you see it today?
What?
Autodesk trading just a touch higher. That's it.
Really?
That trade went from a credit of $2.50 down to about 45 cents.
Wow.
Yeah.
Well, good
Which
trade.
Is what you want. You want it to go.
Good paper trade. Not a suggestion or anything.
It was just a suggestion. It wasn't a trade. It was just a suggestion of what to do. Anyways, maybe...
Could you get in trouble if someone comments like, thank you today for that trade? If they're like, wow, thanks so much for that trade. I made a killing.
No.
Could you get in trouble for that?
I just can't comment back or even thumbs up it.
Right.
By the way, all of our comments and thumbs up, they're all archived in 2 different locations, one in Florida, one in Texas, for the SEC for 7 years. So careful which post.
Oh.
They have to
wow, so the SEC has everybody's comments on there, huh?
Well, we have to keep them. If
Right.
the SEC says, hey, August 13th, show me every comment you got, we have to be able to, bam.
Yeah. Interesting. Interesting.
Maybe I'll go first because my thing is, hey, the whiteboards are here.
I hope so. If it's not, that's just scared the heck out of somebody. Should probably go help.
Stack it like that. So it's like really crazily big. I don't even know if it is. Oh, there it is. Sounds good. All right. Well, we sorry for that. We got whiteboards, massive whiteboards, by the way.
Bigger than I am.
Look at. I mean, that's a whiteboard there, right?
No, that's a whiteboard.
I thought they would be.
I feel like that's not going to do it justice on there, but yeah.
You know what's funny is when we got them, I thought it's kind of expensive.
Well, we didn't.
For a whiteboard, I was like, I guess that's what they go for.
Well,
but
we just said 8x4, and we didn't even measure it either, by the way. We just
No.
kind of took a guess.
I think we've got 16 feet to work with over there, though. I think we do. Charlie's gonna be happy. And I made it. Did you see it?
That was a good shot.
Okay, let's get started. I'm gonna go first because I have a feeling mine was kind of basic. I just want to throw something out there for technical Thursday. So a lot of people look at moving averages. Simple period moving averages, extremely popular to put on the charts. However, you can overthink the moving averages. So you got to think of moving averages for example, I use the 20 period, the 50 period, and the 200 period. They're always on all my charts. You see on the closing beat, the 20 is always green, the 50 is always blue, and the 200 is always red. When you look at the shorter term moving averages, you got to think of those as more like a rubber band, right? They're not like solid areas where you're going to expect something to happen. It's a range, give or take. So you can't say, and I love all the people on YouTube that do this, it's down to the 50-day, should I buy at the 50-day? Well, I mean, that's fine. It's a reasonable area to expect that you're paying about average over the last 50 days, but it doesn't have to be exact, meaning if it goes a little lower, you don't have to freak out. The 200-day moving average tends to be more of a hard, concrete spot. How you can tell is if you pull up a stock, you can look at the 200-day moving average and say, okay, what does it normally do around there? And sometimes it acts like a perfect sort of concrete floor or ceiling, and other times it sort of violates it a little bit before it does one thing or the other. A great example would be oil. Oil tends to trade right around it. It's not a perfect thing. So it's kind of a warning today. Just when you use the moving averages, don't think of them as magic specific areas. It's a bit of a range. And if you're not familiar, the simple period moving averages, all they're doing is taking the last X number of closing days and then showing you what that average is. So a 20 period moving average takes the last 20 closing prices. If you're looking at a daily chart, it's the last 20 closing days, and averages it together and shows it to you on a chart. So it's just a way to kind of see, am I paying above the short-term average or below the short-term average for a particular stock? If it's a 50-day, then it's considered midterm, and if it's a 200-day, you're paying below or above the long-term average price of the stock.
Speaking of moving averages, yesterday was the first time in 57 trading days that the S&P closed above its 200-day moving average.
Oh.
Fun fact for you, right?
Wow, and we did close above it, didn't we? Yeah. Okay. Wow.
And if you followed our Twitter, you would have seen that yesterday. But since
but you're
you're talking about it, I just thought I'd bring it up.
I like it. We did what we do a class for customers the other day on the Golden Cross on the Nasdaq. That's a bit of a misleading one there, but yeah, pretty cool. So, anyways, that was my thing. We're using today's video as kind of feedback because I'm not sure if that was technical.
That's technical for some.
This is technical.
I think a lot
that's
of people
basic
like
technical.
It. Yeah.
I think sometimes I'll come with something really aggressive, and sometimes maybe just friendly heads up.
So you had came with something really aggressive a few months back for clients. You had done this. You had gone back and you had looked at the strategy of buy at the open, sell at the close, or buy at the close and sell at the next open. One of my favorite things to look at.
You
did it was a deep study, by the way. This was one where I was like, first off, the fun thing on Twitter is 2020 my plans, and it'll have like Tiger Woods in the green Masters jacket, and then it would be like the year 2020, and it's him and his DUI or whatever it is.
I saw that. Yeah,
it's like a whole trend that the kids are doing nowadays. So I was trying to think. I was like, all right, so how's 2020? How's the stock market impacting different strategies that people might have?
Yep.
And just to give you an idea of what your study was for the people that may have not watched it, may not be customers, may not have seen the video.
Yeah.
Here's the general idea is if you bought at the close and sold at the next day's open, since 1993, which is basically the beginning of time, that's the year before I was born, also the year the S&P was
SPY.
founded.
Well, the year the SPY.
yeah.
That's the granddaddy of all ETFs, by the way. So that's like known as the beginning date. There were no other ETFs prior to that. It was the SPY, and then everybody else said, "Oh, let's try this."
So it would be the beginning of time.
Beginning of time.
So since the beginning of time, you'd be up almost 573%, I believe it is.
Yeah, it was
Somewhere
around
right around there.
570% when we did the last class.
Which is nuts, right? And so if you go back and look, okay, well, what if you bought at the open and sold at the close? You'd have to see what's the correlation there. You'd be up 3%.
Yeah,
from 1993.
That was a fun one. Somebody asked the question, if you had to pick a strategy, what strategy would you pick? Meaning, give me something that I could do. And I said, I don't really have a lot of time to lay out a strategy for you guys. So what I did is I said, let's just do a simple one. Buy the market at the open and then sell it when it closes. Conversely, buy the market when it closes and sell it the next morning when it opens. So I did this whole long study on that to see, is there any benefit of doing one or the other? And God darn it, you make a whole lot more money if you buy the close and sell the open in the long run.
Yeah.
That was cool.
So, if you look at 2020.
Please tell me you did not debunk the whole thing and somehow I made a mistake.
Well, let's just take a look at this, because I have this thought every morning. I'm a bit of a contrarian. I got a buddy who's not a contrarian, and every morning he goes, we're going to new highs, and I'm like, eventually we're going to pull back. And so you look and you see futures down this much, oil down this much overnight, and I go, buddy, just be careful. And then there everything goes, and everything takes off.
And he never sees it, right? Because it's overnight, it's down a whole bunch, and you're like, no, we're opening lower. We wake up, we open higher.
Yep.
That seems to be a trend lately.
And it's not irritating, but it is like, hey, I have a thought that eventually
I want to be right.
Eventually we're going to pull back, and we haven't, and all these overnight stories. So since I think we go back January 1, all right, let's just say January 1, 2020. By the way, that's when times were good. January, times were good.
Times were good. Everybody was happy. We were still willing to travel over the summer.
Planning concerts. Crazy. So if you bought at the close and sold at the previous open, it's actually the complete opposite. You'd be down pretty close to about 10% on the year so far.
Okay, so you took the long. I'm assuming there's a chart coming up at some point.
There's a chart up right now.
There's a chart up. Okay, so you basically took that study and said, let's do year to date. Let's see what happens.
Yeah, same study you did, just year to date.
So buy at the open, sell at the close. Buy at the close, sell at the next open is what you did.
Right.
Oh.
And so if you decided to implement that strategy, and I don't know when you decided to do that class, but let's say you were like, hey, I'm going to go ahead and give this strategy a try. It's 2020, new year. It would actually be pretty much the complete opposite of what it's been forever.
Can I see the chart? I can't see the chart.
And then if you had bought at the open and sold at the close every single day, you'd pretty much be a break even. You wouldn't be.
Right now, you'd be a break even.
You'd pretty much be at just about break even.
But what? I missed my laptop. But what do we have year to date for the S&P? So that's the question. So, maybe it was just an idea, but you're essentially showing on the screen if you bought at the open, sold at the close, you'd be more profitable.
You'd be more profitable than you would be
if you bought the close and
Yep.
sold, which is the opposite of what we had in the long term. Now, granted, we're using year to date, so it's a small little time
It's
period.
a small
here.
time period, and your original study went back to 1993. So there's
And
a lot
what-
more data there, but
What would be the return if you bought the close and sold the next open? Or where are we at roughly?
for year to date,
Yeah.
we would be, you're right around 0. There's your chart, in case you were wondering.
Okay, so that's buy the open to the close.
Yeah.
And what about buy the close to the open? It's still down more than the S&P. So the issue there is, which is different than the study, is if you bought the open and you sold the close and you left the market every day, right, you'd be at basically break even.
Right.
Market's still down 5%.
Right.
So you'd be outperforming the S&P at the moment.
Right.
What you're bringing up, I think, is, well, that's the opposite of what the long-term picture is.
Right.
In the long run, if you buy the close and sell the open, that strategy works out more.
Right.
It still holds true because it's 570% to 3%. It'd have to do
is
pretty bad
nuts.
for a while.
Yeah.
So temporarily, an inverse of that. But what that tells me, anyways, is all of the excitement and the gains are coming during the day versus overnight.
Is that an influx if you think of like retail investors, quote unquote, coming in the game? Like,
I think you'd have to say so because in the long term, the market's gains come overnight, not during the day.
Right.
Which is fine. You still participate if you're in it because you get the benefit of the gap. However, all the excitement happens overnight, generally speaking.
Yeah.
So when it happens during the day, that means you have Joe Public out there playing the market, investing in the market, buying their index funds. The index funds have to buy their products, buy the stocks. So you could argue that the general public is participating more now than they do generally. And
Well,
that's probably because they're sitting at home, nothing else to do.
Well, yeah, you got part of that. And you think about, what was that stat from a couple weeks ago that Robinhood added 3 million accounts in just March alone, which, by the way, those could be $5 accounts, but you look at E-Trade and Schwab and everyone that's added new accounts in just the first quarter, it's insane.
There's a study or a research thing on, I believe it was CNBC, where they interviewed people based on their high school, college, some college, whatever, their income level and their age. And they said, what are you spending your stimulus check on? And they went through and they highlighted in cells, and almost everybody was trading the market in some degree.
Yeah.
So I think that's the argument is we're all trading the market during the day. That's why this study is the reverse.
Yeah.
Very interesting.
It is interesting.
Yeah. That shows you were watching the prior shows, made you think of that, and then you put it together.
I was going through your wine and wealth classes. You got some deep studies on there. This one just seemed a little bit easier. I was like, I'm going to go year to date. I don't know. It's just
Okay. All right. Well, what do you think then? So I kind of feel like maybe I gave you something today, but what do you think of the two different things as far as how they relate to Technical Thursday? Is that what you thought Technical Thursday should be, or were we off track and maybe it's something else? I don't know. Let us know. We'll be back to do it again next time, and I'll have my laptop back.
Tomorrow's Fun Friday.
Fun Friday.
Just be careful.
What? Anything goes, right?
Well, yeah. So
Cool.
Maybe we set that warning out there. It's Fun Friday,
Get ready for some Disney.
Oh, shoot.
What?
Oh, shoot.
All right, we have to figure out, well, those aren't even gonna fit in the trash can. That box is ridiculous.